I don't think there's anything coming to save Bitcoin. The kind of the bear move we've seen in Bitcoin aligned with that prior capital drain I mentioned for AI stocks. They became, at least temporarily, the fastest horse in the race. Bitcoin's already kind of near the bottom of its historical valuation range. The asset just has to survive on its own merits.
Let's talk a little bit about strategy.
Stretch was doing very well. It did become the biggest preferred ever done. People did apparently build a lot of leverage on top of STRC, so they ran into a pretty big volatility event. There is tail risk. It's got a big reserve backing it, but it's not inherently guaranteed if Bitcoin has crazy price action. In addition, it can depeg.
As global liquidity expands, Bitcoin should be rallying, but this time, the market is telling a different story. Lyn Alden is a prominent macroeconomic analyst, best-selling author of Broken Money, and founder of Lyn Alden Investment Strategy. Lyn Alden reveals that Bitcoin's recent weakness should not be mistaken for a breakdown in its long-term relationship with global liquidity. Her research shows that Bitcoin has historically moved in the same direction as global M2 money supply roughly 83% of the time, with only occasional periods of divergence. According to Alden, the current market is one of those exceptions. Although global liquidity has continued to expand, Bitcoin has lagged as capital has been diverted toward alternative opportunities. A significant portion of investor enthusiasm flowed into Bitcoin treasury companies such as Strategy and Metaplanet, while an even larger wave of capital rotated into AI-related stocks, particularly semiconductor and memory chip companies, which temporarily became the market's preferred destination for growth capital. At the same time, Alden argues that the broader cryptocurrency market has become a structural headwind. Weak altcoin performance, repeated speculative cycles spanning ICOs, DeFi, NFTs, and meme coins, along with venture capital token launches that often disappointed retail investors, have damaged confidence across the crypto sector. Despite these short-term pressures, Bitcoin continues to closely track the Global Liquidity Index, GLI, over longer timeframes, reinforcing the view that expanding global liquidity remains one of the strongest macro drivers of Bitcoin's long-term price trajectory. Bitcoin's long-term story may still be driven by global liquidity, but will history repeat itself? Tell us what you think in the comments, and if you found this video valuable, please like, share, and subscribe to stay ahead of the market.
Yeah, when we did that study, we found that 83% of the time, Bitcoin goes in the direction of global M2, and 17% of the time it diverges. This has certainly been a time where it has diverged. I mean, global M2 overall has been pretty decent. It's not been soaring, but it's been to the upside. And this has been, pretty rough period for Bitcoin, obviously. I think some of the reasons for that are, one, I do think that some of the price action we would have seen in Bitcoin instead showed up in the MNAVs of some of these companies. When Strategy was trading at 3 times MNAV, Metaplanet was trading at like 8 times MNAV. That all else being equal, if those are trading at lower MNAVs, and just more of that enthusiasm poured into Bitcoin itself, we probably would have seen a somewhat higher high this cycle. But I think it's not, I think, an accident that the kind of the bear move we've seen in Bitcoin starting in autumn of 2025 aligned with that prior capital drain I mentioned for AI stocks. So as soon as kind of the hyperscalers free cash flow started to collapse and everything kind of shoved into those memory stocks and the other kind of like chip stocks out there, I do think that trade was so powerful that it sucked liquidity out of multiple places, probably including Bitcoin, because a lot of investors were just kind of looking around and saying, well, this is, it's a decent asset. It's not soaring, but these other things are just going straight up. So I think that they became, at least temporarily, the fastest horse in the race. So that was kind of the new proxy for just things you want to own. I think another thing kind of weighing on Bitcoin is the broader crypto space, which I've been structurally bearish on. This is the first cycle where they didn't really get a cycle. And moreover, I think that there's a kind of an increasing widespread view, which goes back to what a lot of Bitcoiners were saying, which is that there's really no there for outside of Bitcoin, outside of stable coins. I think the vast majority of the rest of that space, some other things, you can tokenize gold, you can tokenize real world assets. I mean, there's a market for that. But once you get into like really circular speculative things.
In a market obsessed with the next big catalyst, Bitcoin's long-term success may depend on something far simpler than investors realize. Lyn Alden reveals that Bitcoin's long-term strength comes from its simplicity, sound monetary design, and the ability of individuals to maintain full control over their assets rather than relying on governments or financial institutions. She argues that the ecosystem benefits most from policies that protect self-custody, reduce tax burdens on small Bitcoin transactions, and make the network easier to use in everyday life. As cryptocurrencies gain broader mainstream acceptance, self-custody is becoming increasingly important because it allows users to securely manage their own digital assets while preserving privacy, ownership, and financial independence. Alden also cautions investors against expecting government initiatives or headline-driven events to become Bitcoin's next major catalyst. Instead, she believes Bitcoin must continue proving its value through market demand and its unique monetary characteristics. As leverage and speculation are gradually removed from the system, long-term investors continue accumulating Bitcoin, laying the foundation for future bull markets. She further advocates a conservative approach to Bitcoin's development, warning that protocol changes should never compromise decentralization or security. In her view, Bitcoin's enduring success depends on preserving its stability, protecting self-custody, and remaining the world's most trusted form of permissionless digital money. Let's get back to interview.
But I still, again, I think that, while some of the aspects of it are useful, I think what really benefits Bitcoin is just simplicity, just like
Yeah.
protections on letting people self-custody it,
Mhm.
ways to spend it in kind of de minimis ways that are not taxable to relieve the accounting burden, um, and things like that. A lot of this other stuff is more financial institution stuff,
Mhm.
which is fine. Um, but I think the the market always wants the next thing. Like I remember, one of our podcasts early on in this new administration was about the strategic Bitcoin reserve was brought up,
Right.
and either on your show or others, I tended to fade it whenever it was asked. I mean, obviously the it has to be asked because it was the thing of the time. And my view was, I think they're going to ring fence the Bitcoin they have probably. I wouldn't bet on them just buying a million coins or anything huge like that. I'd
Mhm.
rather be surprised at the upside
Yeah.
than assume they're going to do that in my forecast. And yet there are a lot of people that were super hyped up about it. And I think we're kind of a maybe not quite that situation, but I think that while investors are going to watch these things, and while especially certain companies have to watch the passage of this legislation, um, I don't think there's anything coming to save Bitcoin. I think Bitcoin has to kind of either its merits are going to be seen by the market, and it's going to be bought, by players in the market, and they're going to take advantage of cheap Sats and a lot of the fast money washed out, and a lot of the parts of the ecosystem deleveraged, and then it'll climb its way up, and then once it starts climbing its way up, that of course gets outside money interested again. That's what makes it become fast money. If something's bottomed and rolling up, you get again the technical chartists that come in and say that's actually a pretty good chart. You get the momentum traders, you get the FOMO traders, and you get all the marketing around Bitcoin one day reclaiming 100K and then reclaiming all time highs, and it just kind of feeds on itself. And until then, I think the asset just has to survive on its own merits. It's the most liquid way to store and send,
Mhm.
permissionless value. It's a strong money in the digital age, and I think those fundamentals are what allows it to make higher highs and higher lows through bear markets. And from what I've seen, I mean, I've seen way weaker sentiment this bear market than the 2022. Yeah, good question. I mean, one is from what I recall, Jeff mentioned he's running knots. I don't think he signaled anything about a protocol change, even though those are sometimes considered the same thing. It depends on what version of knots you're running. So I
Mhm.
would let him say whether or not he signals for a protocol change. For me, whenever there's a concerted effort to change Bitcoin quickly, I tend to be more pushback against it. So in a few years ago, this was kind of the Taproot Wizards push to make Bitcoin more expressive.
Mhm.
My view, the only kind of the technical concern I had was adding things that could add MEV to Bitcoin. Basically things that make mining more complicated, that could potentially result in centralization of mining. And for me, so I would analyze the technical arguments from those either for or against. But for me, the bigger concern was venture capital money raised to try to push that change, and people claiming that change is inevitable, Because as soon as I hear that, I'm like, well, okay, I'm not changing then. Like you've successfully pushed me to not change if you're going to market it like that. And I think we've seen somewhat the other direction this cycle, which is, I think there are reasonable concerns around non-monetary stuff winding its way into Bitcoin. I certainly wouldn't support changes to Bitcoin that allow that make it easier to either block size increase or loosening of the consensus rules to let more of that happen. I would not be in support of that.
The broader message is that Bitcoin's future is likely to be shaped less by short-lived headlines and more by enduring macroeconomic and monetary forces. While periods of divergence from global liquidity can create uncertainty, history suggests that temporary capital rotations eventually give way to fundamentals. As speculative excess fades, stronger capital tends to return to assets with proven resilience, transparent monetary policies, and growing institutional recognition. At the same time, preserving the network's simplicity, decentralization, and self-custody principles remains essential to maintaining the qualities that distinguish Bitcoin from the wider cryptocurrency market. Rather than relying on government intervention, regulatory surprises, or the next speculative trend, Bitcoin's long-term investment case continues to rest on its ability to serve as scarce, permissionless digital money in an increasingly digital economy. If global liquidity continues expanding and confidence gradually returns, Bitcoin may once again demonstrate why it has consistently recovered from previous downturns and established higher long-term valuations despite repeated periods of skepticism and market volatility. Is Bitcoin's next bull run just waiting for global liquidity to catch up? Thanks for watching.